Hey traders, Nick Shaheen here looking at some pot stocks. This is not one of them. Let me switch. All right, we'll start with MJ. So, what's today? The 8th. Before I forget, if you haven't subscribed already to the channel, it's free. There should be a link that pops up on the screen somewhere at the end. Also below, I'm going to put some links to an app, a free app that tracks the stocks per me. And check it out, it's pretty cool. So here is MJ. What time frame we're looking at? Daily? Nah, probably too long for these stocks, so we'll switch to a couple of hours. All right, so on a good day, up, it's not red, up 1% for the ETF. Looks like it's trying to put a bottom. It's fighting for a real good cause here at just under 16 or at 16, because you don't want to lose footing, and that's how necklines are formed, and then they would have a measured move lower. So kind of like that red thing in progress. So it hit the first leg of it, and it's trying not to hit the second leg down to 15.5 or so. So that's MJ. CGC is still the best one as far as action relative to its recent lows. You can see that it had a hideous time after the earning on and thereafter. The earnings for the whole week was bad for the whole sector, and this is when I did a video, and since then I've done a few other videos and they've been spot on as far as when to get in, when to get out. Here I suggested there's a support, then we got this within hours, then I posted the video saying this is where I'd get out because of this. At 21 and change, repeated itself. So I still track the potential of the upside breakout. You can see all these tails that I leave out there, and an inverse head and shoulder, loosely interpreted. I know technicians will probably not like exactly how I drew my lines. I'm just trying to track the necklines that matter. So I keep the lines. They don't bother me. If they bother you, I can do this, and I can speak to it the same exact way. There is a neckline. I can see it. Any which way I look, they pop off the screen. So you can see that there was a failed event here, failed effort here, failed effort here, failed effort here, failed effort here, and a ledge here, I think. I'll zoom in. So this is from where they fell. They keep trying to get back to it and break out from it. So the bad news is that they haven't done it. The good news is they keep coming back to it. And if you look at it, just step back. You hear of head and shoulders. This is the opposite of one. They dropped this much, they dropped that much, and then now they're dropping this much. So if they can somehow get up here and start using this as a base, this is the upside potential. Whatever the neckline distance to the depth of it is the upside potential. So then they get out of the hole. So it's starting to look like maybe, what do you call it, a complex head and shoulders. If you don't want to take this whole thing as one head, you can take it shorter and then a couple of shoulders on each side. Any which way I look at it, there's a neckline that keeps getting tested, and if they can do it from higher lows, even better. So if I were to bet on a pot stock short term for trading, this would be it. By the way, most of these comments are short term because it's a 2-hour chart. So if I'm in it for the long haul, I should look for a weekly chart. And that's how I found the bottom down after the earnings. Because in 2016, that was the funky peak for 1 week. It took them a year to break out from it. And then that week, they came back to it. So clearly, it was going to be a fighting spot. So here is what I'm saying. It's stuck at another ledge that has history from back in 2017. Served as support several times, and then that's where they fell apart from, and now they're back at it. So it's going to be sticky. It's going to take a lot of work. So this orange line is my first trigger on a lower time frame. If I wanted to put another one, I'll probably put it here. I'm not going to make it too scientific. Maybe another one here, 2175 or 2260, 2270. Those are just areas that look interesting for CGC. I'm spending time here because there's actually something to look at. So what about the bug out moments? It all depends on personal preference. I think that there's a consolidation period here, zone at 1850. So I would say that's support unless it fails. So if I was long, I would want to put an alert at 1850. So if it's lost, I want eyes to be on it, because then it looks like an inverse cup and handle that would probably target 17, and then they start talking about the gap. So what about here? This was like the worst kind of news, back to back to back to back. So it's a legitimate test on volume. So not likely to get there without a new bad story. So without any news, the meandering up is more likely, especially in the bullish market, which, by the way, the market's made a new high today, the hours after the Iranian attack. So pretty bullish market. ACB, I'm afraid to look at it, because really the only way to look at it from an investment perspective is that it's back to the base from which it sprang back in 2017. But it's a zone, and it could go to zero. I'm not saying it's going to zero. I'm saying I wouldn't average down into it. I would only trade it and probably be a quick trader at it, because nothing is... I wouldn't catch this fall. This is like, if you average down during the .com bubble into, say, Webvan, you lost all your money. I don't average down with a speculative trade. This whole industry is speculative so far, so don't take offense to it. Tilray, maybe a little bit better, but still, same category. Cronos, what are we here? 15 minutes? I want a couple of hours at least. So trying to put a base in. Let me go back to Tilray. Sorry. I didn't mean to skip over it. It's trying to get back to a neckline from which it lost. I think there'll be sellers around 1620. That's my opinion. 1627. So if I'm looking to short it, I would wait for it to get there, short it with a tight stop. If I'm looking to get long it, I wouldn't get long it until it gets over that hump, and so forth. So CRN, better base. Again, this becomes a must hold, otherwise it opens a trap door lower. So if I were long, I would put an alert below 640 to start looking at it. This again was a really good test, so I don't see that happening without good reason. The upside potential would be, I'm going to put it right here, it's far away at 8, but that would be a good, place to go above and break through. If we get there, if I'm long and we get there, that's my exit point. Get it? If I'm long from here, and if we get to it, that'll be my exit point. I'll tell you what, I'm going to put another alert here at 7-ish. And I want eyes on it to see what happens, because this 8 is a huge contentious level. Back in November, they fell apart big time. A big trap door. What was that drop? 22% or so. They came back to it immediately and failed just as miserably. So that level is a roof, and they just recently failed from it. You can consider this one a fail from it too. So I would consider it a roof until they break through it. Onus is on the buyers to get through. This cluster is resistance, in my opinion. So until it's broken. So APHA, better makeup. It's off the highs, off the lows. So I would put it in the category of CGC. I would trade it accordingly. 4.9 should be a selling zone. So I wouldn't start longs until they overcome it. And even then, it's headed into... It all depends on time frames. For my style of trading, I want to see a breach of 530 in order to consider them longs for my style of trading. But, that doesn't fit everybody. This is the same category where it's trying to draw head and shoulders, which could be, if I lose 522, or let's call it 520 for an easy round number, then it could trigger a head and shoulders that would target the recent lows down to under 4. This is technically the size of the move down. It doesn't look obvious now, but it could happen. I don't like to assume anything. So if I take emotions out of it, I know some people get upset when somebody draws something negative about a stock they love, but it's best to try to stay unemotional in that. So something like this. Again, technicians will probably call me out on a few things, and in theory, this yellow line should be as deep as this whole thing, but in my experience, they stop at prior support levels. So I'm going to put my mojo on it and tell you this shouldn't be longer than this if the trigger happens. Now, conversely, there is a lower high trend that if breached might bring buyers up. So if I'm long, I'm not panicking on dips down to here unless it fails. That's probably the best takeaway from this one. Medif looks like a bowl in progress here, a cup and handle. So if I were to draw a line of upside potential, I would probably do this, fail here and then fill it here. So, whoops, what happened here? Anyway, I know what happened. I did something. Some people did some things. Somebody said that. Okay, so if they don't go any deeper and they get back up to here at 3.2-ish and they break through that neckline where they failed just recently on the 2nd, then they could do some good momentum follow through into it. I don't know enough about the fundamentals, but where did this green one come from? So let's zoom out. I must have drawn it from other time. Okay, so it's bouncing from my prior coverage of it. This box suggests that there's a support zone from this consolidation period back in 2019, March through April, tested successfully in October, and tested successfully most recently in December, even nicer than October because this one is like a V. This one they had time to put in some work. So we shall see. Also, this is, if I'm looking at this whole period here, this is the lower end of the value area, which tends to also lend some support. So for this one to lose 2.5 is going to take a lot of work by the sellers, in my opinion, or a headline of sorts. I don't know when it reports there in the world. It just reported, it looks like. So, all right, GWPH. I just did a whole write-up for members and friends. So if you want the write-up, just join us. I'll put a link below in the description. There is a trade to be had. That's all I'm going to say about it. And it could be a really good trade. It just depends on how one actually does the trading. This one is living up to the upside expectations from higher lows. We're talking about Corbis. I don't think this one has options, so I'm not going to spend too much time. However, okay, so if I'm long this guy, I would probably lock my longs here. I don't mean that I sell everything. I could, because this is it's approaching a ledge and a prior failure point. So at and near 650, it's going to probably approach some selling pressure. So I just to remember that I said that, I'm going to do this line right here and say a visual representation of target of sorts. Hexo, Ugmo. So it looks like I drew a lower time frame. Where is it? Trade setup, where I said it's trading inside of a box. Consolidation, either this or that happens. Clearly I drew it back then, and the downside happened. So buyer beware. Don't fall in love with the stock. So big picture, the daily. Whoa, let's reset the chart. Okay, the daily looks pretty ugly. Lower high, lower lows. You know, it is a nice falling wedge, which usually break upside, but they haven't been able to. I can tell you, you know, it's coming to a pinpoint, so something's got to give soon. Oh, goodness. That's a weekly chart of it. Same story as ACB. I can't give you any idea what's it going to do. Here at 22nd Century Group, is that the real estate company? Anyway, it's a good base. Strong base, but what's with this guy here? The earnings reaction down to 69 cents. So, and this one. So it's at a point to where it has to make a decision. It either bounces big or, you know, there's no bottom. So tough call. If I'm long it, I probably don't panic out of it because if it's inside a good base, but it's a giant range. I mean, it looks like pennies, but in relative terms, there's hardly any good information on it here. You just have to, do some homework on the prospects. and see the levels that get you out. So assuming this was a flush, then it's a, anything below that is just a new chapter of information. So just say objective, stay objective. All right, Nick signing out. Boy, this is a little bit longer than I wanted, but I think I covered all of them.